They tell you to watch the Federal Reserve. They tell you to monitor inflation like a hawk watching its prey. They bombard your screens with flickering charts of interest rates, jobs reports, and the daily meaningless fluctuations of the S&P 500. It is a performance, a calculated, high-budget distraction designed to keep your eyes fixed on the flickering lights while the very foundation beneath your feet is systematically dismantled. While you are paralyzed by the manufactured anxiety of the daily news cycle, I am watching a quiet, monumental transformation. This is not just a housing crisis. That term is too sterile, too safe. It implies a temporary malfunction in an otherwise healthy machine, a glitch that can be patched with a policy change or a rate cut. What I am witnessing is something far more ancient and far more lethal. It is a generational wealth transfer, systematic, inevitable. It is the final act in a multi-decade play to reshape the very definition of human autonomy. I see the death of the American dream and the birth of a new, rigid social contract. To understand why your rent is skyrocketing, why your children may never own a backyard, and why the starter home has become a myth of a forgotten past, you must understand the pattern. History does not repeat, but it does rhyme, and it rhymes with mathematical precision. The idea of universal homeownership is not the historical norm. In the long lens of human civilization, the era of the middle-class homeowner is a fleeting anomaly, a specific stage in the life cycle of an empire that is now coming to a close. I have traced this mechanism back to a singular, lethal transition, the move from production to financialization. When an economy makes things, steel, cars, energy, technology, the middle class expands because labor has leverage. In a productive society, private property is the bedrock of social stability. But as an empire matures and its debts grow unmanageable, it becomes financially optimized. Real production becomes inefficient compared to the sheer leverage of financial capital. In this stage, everything is converted into a debt instrument. Education becomes a loan, healthcare becomes a private equity play, and finally, the most stable asset of all, the land you live on, is converted into a permanent stream of cash flow for the elite. This is the mathematical mechanics of inequality. It is the moment a society begins to consume its own foundation. Welcome to the Neo-Feudalism pattern. This is the transformation of a populace of owners into a society of modern-day serfs. To understand where we are going, we must look at stage 1, the foundation. This was the era spanning from 1945 to 1970. I call this the strategic stability era. After the chaos of World War II, the architects of the modern West realized a profound psychological truth. A man with a mortgage doesn't start a revolution. He has too much to lose. He is anchored to the system by the very soil he sleeps on. Homeownership was the bribe offered for social peace. In 1940, the United States homeownership rate was roughly 44%. By 1970, it had surged to nearly 64%. This wasn't merely the product of a free market, it was a top-down engineering project. The creation of the GI Bill, the FHA, and the 30-year fixed-rate mortgage turned the American suburb into a fortress of the middle class. For the first time in history, the son of a factory worker could own the land he walked upon. This was the peak of the owner society, where the home was a sanctuary, a piggy bank, and a declaration of independence. It was a mathematical miracle fueled by post-war dominance and cheap energy. But miracles in finance are always borrowed from the future. As I study the records of that era, I see the subtle shift. By the late 1960s, the cost of maintaining this stability began to rise. The gold standard acted as an anchor, preventing the infinite expansion of credit. In 1971, that anchor was cut. We moved into a world of pure fiat, where money could be conjured from nothing. This set the stage for the most dangerous phase of the pattern. We moved into stage 2, the financialization, spanning from roughly 1980 to 2008. This is the moment the home stopped being a shelter and became collateral for a global casino. I watched as the 1980s deregulated the banking sector, turning mortgages into pieces of paper, securities, that could be sliced, diced, and traded like commodities. This was the era of mortgage-backed securities. The math shifted. Banks no longer cared if you could actually pay back a loan over 30 years. They only cared about the volume of debt they could originate and sell to the next buyer. By 2004, the U.S. homeownership rate hit an all-time peak of 69.2%. On paper, it looked like progress. In reality, it was a bubble of synthetic ownership. Most people didn't own their homes. They were merely temporary caretakers for the bank's collateral, living on a prayer of ever-increasing prices. The system was gorging itself on the future earnings of the working class. When the leverage reached its mathematical limit in 2008, the system didn't just break, it was purged. The Great Financial Crisis was the catalyst for the largest foreclosure wave in history. Millions of families were evicted, not because there was a lack of houses, but because the debt structures built on top of those houses had collapsed. But here is what they didn't tell you in the aftermath. While you were watching your home value plummet, the architects were preparing for the next phase. They realized that owning the debt was good, but owning the underlying asset, the land itself, was better. They realized that the volatility of the middle class was a liability. The solution was to remove the middle class from the equation entirely. Why sell a home once when you can rent it forever? Why create a society of independent owners when you can curate a population of dependent subscribers? This brings us to stage 3, the Great Buyback. From 2012 to the present day, the mask has fallen off. The pattern has accelerated into an aggressive, algorithmic assault on the concept of private property. I watched as the 2008 wreckage was cleared away to create a blank canvas for the titans of Wall Street. Companies like BlackRock, Blackstone, and Invitation Homes didn't just appear, they were invited by a system that favored institutional liquidity over individual stability. When millions of Americans went into foreclosure, those homes were harvested. The data points are aligning in a terrifying trajectory. In a world of manipulated, near-zero interest rates, rent became the new gold. It is a yield-producing asset that inflation cannot touch. In 2023 alone, data showed that institutional investors bought nearly 25% of all single-family homes sold in certain U.S. markets. In high-growth hubs like Atlanta, Charlotte, and Phoenix, that number surged toward 40%. They are not just buying houses, they are outbidding families with the cold precision of high-frequency algorithms. Think about the math of this unfair fight. Imagine a young couple who has saved for 5 years. They have a modest down payment and a dream of a backyard. They are being crushed by a 7% mortgage rate that eats their disposable income. Now consider the hedge fund. They borrow at institutional prime rates you will never see. They pay in cash, closing in 48 hours. They don't need the kitchen to be pretty, they only need the cap rate to stay above a certain threshold. They are turning the American suburb into a giant managed REIT, a real estate investment trust. This is the Rentership society. You aren't competing against your neighbor anymore. You are competing against a $1 trillion AI that decided your neighborhood has a 6% projected annual growth. You lose the war before the first bid is even placed. The goal is to create a permanent floor under housing prices that no middle-class salary can ever reach again. If you cannot buy, you must rent. And if you must rent, you are a source of permanent, compounding cash flow for a shareholder you will never meet. This is the moment the American dream was officially liquidated. We are now entering the final phase. Stage 4, the Neo-Feudal reset. This is the future, and it is hidden in plain sight, camouflaged by the language of convenience and the sharing economy. The phrase, "you will own nothing and be happy," is a meticulously engineered global business model. In the original medieval feudal system, the serf worked the land owned by the lord. In exchange for protection and the right to exist on that land, the serf gave a massive portion of his labor to the lord. Today, the protection is your access to a high credit score and the digital financial system. The land is a corporate-owned rental unit or a build-to-rent community where every house is identical and owned by the same entity. Your labor doesn't build equity for your family, it builds the quarterly dividend for a private equity firm. This is serfdom 2.0. The parallels to ancient Rome are staggering. As the Roman Republic collapsed, the small independent farmer, the backbone of the legions and the moral center of the state, was systematically wiped out. They could not compete with the latifundia, the massive industrial estates owned by the senatorial elite and worked by disenfranchised labor. The middle class didn't disappear by accident. They were engineered out of existence because an independent citizen is harder to control than a dependent subject. Wealth concentrated at the top until the system became so top-heavy and detached from reality that it simply folded. I see the same cracks in our marble. We are repeating the Roman error with mathematical precision, trading the long-term stability of a broad middle class for the short-term efficiency of a rent-seeking elite. I see the acceleration in the numbers. The U.S. national debt is screaming past $34 trillion. The wealth gap today is wider than it was in pre-revolutionary France. The top 1% now hold more wealth than the entire American middle class combined. This is not a functioning, sustainable economy. It is a harvest. The system is no longer designed to help you climb. It is designed to keep you paying for the right to stay exactly where you are. We are currently in the final transition between Stage 3 and Stage 4. The Great Buyback of physical land is almost complete. The next step is the normalization of subscription living. In this world, you won't just rent your home. You will rent your car through a monthly service that includes the insurance you used to own. You will subscribe to the software in your appliances. You will pay for the right to exist in a world where every square inch of the earth and every moment of your time has been monetized and leased back to you. They are replacing the ownership of the 20th century with the access of the 21st. But access is a privilege, not a right. Access can be turned off with a single click if your social credit or your financial standing falters. The pattern is moving faster than most people can comprehend. The death of homeownership is the ultimate signal that the old social contract, the one that promised hard work leads to legacy and land, has been shredded and fed into a Wall Street paper shredder. We are moving toward a world of managed poverty, where you have enough to consume, but never enough to compete. The question for you is no longer, how do I save for a house? The question is, how do I survive the reset? The only defense is understanding the mechanism. If you can see the gears of the machine moving, you can at least choose not to be crushed by them. You can seek alternative assets, you can build parallel communities, and you can opt out of the debt traps they've laid for you. The Neo-Feudalism pattern is the most important story of our century. It is the invisible wall being built around your children's future. I am here to show you the blueprints and to point out the cracks that the pundits on the news are paid to ignore. The transfer is happening. The lords are claiming the land. The only thing left to decide is whether you will be a tenant for life or if you will find a way to break the pattern. The gate is closing. It is time to wake up. Once the pattern is complete, there will be no more exits. The era of the owner is ending. The era of the subject has begun. Do not say you weren't warned. Understand the pattern. Prepare for the reset. Watch what happens next.